most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. Okay?
Okay.
Right? Like, the point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right, I mean, right, but I mean, we can all look Bitcoin sort of as...
Forever, Laura.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor.
Yes, man. What is going on? What is going on? My name's Gerald Peters. And welcome to the Money Flow. This is the MFG Bitcoin Trade Report with GP, man. That's me. You're not going to see me on the screen, or you shouldn't. Hey, if you're looking for a group of like-minded people, come trade with us over our Discord. I put out some alerts. I trade and invest with an open hand. I show you what I'm doing. Been doing it most of my life. Pretty much a professional trader, I like to think. The MFG Bitcoin is new. It should be down in the video notes. Pull up the comments. I'll see if it'll let me put them in there or not. But if you hit that QR code, it'll take you to it. Or go to geraldpeters.info. You can get there. Hey, if you go over there and get a copy of my free ebook, you don't have to die broke. And you could get a copy of The Science of Getting Rich. All of that is completely free, man. Go pick it up. So check this out. Let's do a little technical analysis. We got Bitcoin running, man. I put out last week, last Thursday, Friday. I was building up the positions. We've been following it. We follow it 24 hours a day, 7 days a week. Every day, Bitcoin never takes a day off, and neither do I. But I get to do what I love for a living. And when you do what you love for a living, you get to skip to work, as Warren Buffett says, and you never work a day in your life. All right, now, you check it out right here. What we see here is the stage one. Bitcoin trading at 113,597. If you were just to look, let's do some technical analysis, baby. If we just look, and you just look at this chart and you said, where's the lowest price? That'd be here. And where's the highest price? That'd be over here. So the general slope is up. You can see that, right? Now, this is a 1 minute chart. But let's jump back for a second. Let's take it back. Let's go to the daily. Here we go. Boom. Sorry, pulling it up. There you go. You can see me. You see over here, you see the stage 2 breakouts, what that says. Maybe we can make this a little bit bigger. Boom. You click on it, and then you go over here and you hit this positive sign. Then we can close this down a little bit. So we got a stage 2 breakout forming. That's when price makes its little move right there, and it makes a move to get above the 20-day moving average, okay? The 20-day moving average. Hey, if you come over here, this is the petersreport.com. You can go there anytime. It's not connected. It's the Substack just brings it to life, man. My emails just bring this to life, okay? And but the petersreport.com has been free for 6 years now. I put a lot of work into it. It takes me about 6 to 8 hours on Sundays just to get that up and then to get our letter out, man. And I do this free, kind of my way of giving back, so to speak. But if you're not on it, go over there and click on it, and you can get everything. I put out 3 letters. We put out the Peters Report. We put out the Trade of the Week, where we try to take our best trade and get it out. It was going to be Bitcoin, but it's already running, and not everybody has access to Coinbase. If you don't have a Coinbase account, what's wrong with you? You got to get a Coinbase account. Coinbase will allow you to trade futures and perpetuals on Bitcoin. Okay. Let's see. It will allow you perpetuals, meaning you never have to renew the contract. There's a little fee you pay. You go read up on it. I don't think I can explain it well enough yet. So I've been doing the perpetuals on Bitcoin, and obviously there's futures contracts. They got a feature, well, they'll roll the contract over for you. So if you're in a contract and it's making money, you can just keep rolling this bitch forward. All right. One thing about the options, the futures, not options, futures and perpetuals, is you can hedge. You could go short with some of your money. You could borrow against your Bitcoin to then short Bitcoin. One idea, right? That's hedging. So this is right up here. Notice look at what we have here. Top, top, top. This concept is called price has memory. Price has memory. Where it's been before, it'll go again and stop. And that's how you get these resistance zones like this. See? So let me annotate it. Oh, there we go. We got it going across right there. The way you get, I don't know why it's doing that. Come on, man. Don't play with me. All right, try to get this thing fixed. All right, new drink. Thug passion, baby. Boom. I don't know what's going on. It's not wanting to. It is definitely not wanting to. It is not wanting to play well with others. Give me just a second. This thing is, I just lost my mouse. Are you serious right now? All right. So we got a breakout going here, right here. 113,623, 1 minute chart. If we do a little technical analysis, draw our lines, I always tell you look left or right, but right in here, boom. There's our support, right? And you can see where that zone right there has been hit a bunch of times. So if price has memory, it means when it goes to there, it's either going to stop because it's support or become resistance. Okay, so price just attempted to push above the 20 and it was rejected. But let's say it did go up. I'm looking at my first target right around there. Same as a day swing trade. We're not going to save that. Boom, it just broke. Oh man, let me make this bigger.
Dip that started in February was a waterfall decline in April. I think a lot of people panicked and unfortunately sold at the bottom. But we had advised folks that when you see waterfall declines, as long as you don't have a recession, markets will stage a reciprocal recovery, which is in fact what happened. So think of that decline, which in a way was a bear market because it reset positioning. And now we're in a new bull market, but that was actually a very predictable recovery. And so if you ask me where I think we are by the end of the year, I do think it's a strong fourth quarter. So I think the S&P gets us to 68, 6,900, possibly higher. Mark Newton does think, again, similarly that we're going to have a big fourth quarter. And there's a couple of reasons for that. One, corporate profits are strong. Household balance sheets are still strong. We've got a lot of AI visibility. Something to think about, many people don't, is the financial sector is about to have some pretty big productivity gains coming the next 3 to 5 years. And I'm going to cover that in this presentation. And the Fed is going to cut rates. Okay. So let's start with the ISM. The ISM is still below 50. It's at 48.7. If you're not familiar with it, it is the most widely used measure of manufacturing confidence. And it's 31 months now below 50. That is the longest stretch in the history of the index itself. And as we point out here, you've never been late cycle in the stock market when the ISM is below 50. In fact, you've always been mid-cycle, early cycle. So it's actually a very bullish sign that the ISM is still below 50. And in terms of households, I think the biggest reason to be optimistic on households is that there's still a lot of pent-up demand. In the last 10 years, we've actually created 15 million household formations, meaning the number of people that need housing units, and yet we've only built 13.5 million homes. So there is a shortage of housing, and that is a contrast to 2008 when we had 10 million household formations and 17 million homes built. So instead of an excess of housing, we have a shortage. That's future demand. The Fed is more dovish this year as well, and I think it's going to play into September. As you know, a lot of people are warning you about this month, saying stocks could decline.
All right, so we have classic stage 4 decline here. We tried to get long here, and we broke this support. So you're day trading, you close that. Let's see. We're cascading down. So I'm assuming it's going to stop where it stopped before, which would be right over here. So let's give it a little bit and see. Notice the RSI.
Because that's the seasonal pattern. But we think stocks will do well this month. And the reason for that is the Fed's been on hold, and for the first time this year, they're going to cut. In the last 50 years, that's only happened twice, 1998 and September 2024. And as this chart shows, in September 1998, the S&P was up 6%, and in 2024, we were up 2%. So it really contrasts with the seasonal pattern, and that's why I think we're going to do well this month. And in terms of cuts, I don't really know. I'm not a Fed watcher, but I'll tell you the bond market thinks there's 3 cuts this year. That's 1 more cut than the Fed has guided to. And next year, 2.5 cuts. That's a lot of easing that's coming. And I think one of the places you'll see it is in mortgage rates. The spread between mortgages and the 10-year yield is 2.43%. And since 1970, that spread is 1.7%. So mortgage rates will follow the 10-year, which may or may not go down, but then mortgage rates itself could drop 70 basis points. So I think you could see a mortgage rate in the 5.5% range next year, which is a pretty big improvement in mortgage cost. Okay, now here's a third point that's really important. And I think you have...
All right, we're continuing down. So once this one broke, and let's be honest, that wasn't much of a, one single. Let me clean this up. All right, so we cleaned it up. One single. Well, we had more over here. So I'm kind of surprised this broke, I'm gonna be honest. I'm kind of surprised this broke at all. Boom. Hey guys, hit me up 936-661-7786. you're looking for some people to trade with, I'd like to have you in our community. If you're new to trading, if you don't know much about trading, text the word "go" to that number right there. Text the word "go" to the 936-661-7786 and come trade with me, man. One-on-one. We'll do, but hit me the word "go" and we'll get on that. Let's see. Make this a little bigger. Boom. So right there. Now what? Price is at 113,465. So we've fallen 300-400 points here. We blew through this line here. So I'm assuming, now I'm going to assume we're going to come down to this one. You know, that's another, what, $140 there. Now the RSI just went extreme here. Boom. Look at that. TSI is still pointing down. Right here, when we got that curl, that's what you need to see, man. See, when you learn about indicators, you learn about oscillators, you learn about market structure, you learn about fundamentals, you learn stock picking, you learn about portfolio management. You begin to lay all this shit over each other, right? Like, and we're looking for continuity between indicators, between oscillators, between, you know, the technicals on the charts and our fundamental research and our diversification, because diversification is really the only thing we have to protect ourselves. Anchor points help create market structure, give traders something to trade against, making stop loss zones clear around market structure and not arbitrary percentages. Oh, put you back on. What does that mean? There we go. What I'm saying there is sometimes you'll see people and they'll say, well, I don't like to lose more than 10% on a trade. Well, nobody gives a shit how much you like to lose. It, you know, that could be an arbitrary number. That number makes no sense. If the commodity, the item you're trading could easily move 10% in one day, you know, unless you're day trading, it wouldn't make any sense. So you need to adjust your stop losses. You need to adjust your stop losses based on, you know, how much money you could lose there. Hold on a second. Hey, yeah, text me that word "go." And I got something I want to give you here. Come trade with me. We're going to trade one-on-one for an hour a week, and then we're going to trade as a group. But we'll do it one-on-one, me and you. And we'll do that once a week. We'll do it for about a month. Let's see. Here's my, let me show you this here. Boom. The Money Flow Trading Society, the alpha code to unlocking stock market price movement. The beginner's guide to getting started trading stocks, learning a strategy that works, and being held accountable to a strategy and a way of thinking. So I'm gonna get that out to you guys. If you're new, hit that go. This is a from the basics up. We're gonna get in the MFG chart room, where we're gonna look at a bunch of charts. Right now, we're just watching Bitcoin. Let me pull it back up here. Oh man, I'm excited for you to go through this book. Right off the bat, we start talking about the 4 stages of price movement. You know, this may look familiar. Some of it was a little bit snagged from the inside. We got it. What is the swing or position trade? How much money do I need to start trading? What about charts? What are indicators? How to bank profits? When to close a swing trade? Position size? What to trade? Building a portfolio? Buying the bottom? Buying the breakout? And the bonus is the bread and butter strategy there. So I've been working on this book for a while. And any of you guys, send me that no or go if you're new to trading. And this guide here and trading with me, we're going to get you off to the right, on the right footing. Let's get back on this Bitcoin. So boom, look what's happening. All right. It may respect that previous level. Boom, look, it's coming right back. Wow. Look, boom, anchor point, first target, second target. All right. So we'll mark these A. Let's see, another A. Stands for anchor point. Anchor point. Right. This here S1, stage 1, confirmation. Because now the stage 4 decline has stopped. How do we know? Because it put in an anchor point. That was that. And then we had 1 bar, 2 bar. We need at least 4 bars. We need to get above the 5 exponential. Boom, right there. S1 confirmed. Stage 1 stop would be right around in this 113.45 range. First target 113.625. Next target is 113.675. And that's going to be what we just talked about. Stage 1, 2, 3, 4 inside. You're going to see, look, price could easily run back up to that. And price has memory. It's going to go where it was before. And that's what it's doing. Let's take this down. Well, man, that's all I got for you today. Get down there. We got a breakout coming. And I may come back on later today. We got a break. Look, you see it? Now, this is a big, look how far apart these moving averages are. You see that? I call that a broken family. We need that to compress some. So usually this is going to take a minute. You very rarely get, notice what happened over here. Straight down, bounces, starts to break, comes back down, and then runs. It's very common, double bounce like that. TSI, that's a bullish crossover. When it crosses like that, it means prices are going up. You see it over here, it ran up. See it over here, it went down. Histogram right here, this is for momentum, the slope direction, and then the RSI. And so we lay these 6, where are we at here? All right, there we go. Oh, man, we lay these 6. We're looking at 6 different things. So if you go to thepetersreport.com and go to page 10 or 11, it has the basic outline. And we say that our edge is that price assets that appreciate and produce income go up 70% of the time. So if we can identify the 30, then we can just ride the 70, right? Not perfect, but it's something we can do, man. So if any of that sounds new to you, if you don't understand it, you don't know how to combine fundamentals with technicals, you don't know how to go out and pick up stocks or pick stocks, you don't know what to read, what you should be reading, or how you should be walking, or how you should be thinking, man, I can help you with that. Hit me up, man. Text me. Like we said, this is for new people. We'll get you in the FFG chart room, and me and you will trade privately one-on-one for probably about an hour a week, and then we'll do it as a group too. And that'll be exciting. And yeah, I'll send you the details. So text me up. If you're not, get on our emails here. We'll go out with my man Tom talking. Let's see. We'll see what this does. I'm gonna let it go for a minute.
To start to sit back and think about this, which is the stock market has had 6 stress tests in the last 5 years. Okay, that's unusual. These are what I would call black swan events. You normally expect these to happen every 10 years, but we had 6 of them in 5 years. The first was the COVID shutdown. And then in 2021, after the economy was shut down, we had the bullwhip supply chain effect. You guys remember that. Suddenly factories turned on. There was a lot of confusion, a lot of ordering, a lot of shortages. Nobody really knew if things were short or demand was too high. Then we had a massive inflation cycle in 2022. And then the Fed followed that with the fastest Fed hikes in history, which caused a heart attack for the economy. And then in April of this year, we had the tariff global disruptions, which was the same as the Cuban Missile Crisis. We had the entire world watching for a single moment, and it slowed everything and it caused a stock market crash. And then in June of this year, the US bombed Iraq's nuclear facilities, which if you take any of these 6 events, and before any of them happened, we said this will happen in the next 12 months. Almost all of us would have agreed each of these would have caused a recession and a bear market. But instead, the stock market survived, and this is the PE, the S&P. You can see the equal weight of the market, PE, is now 17 times. Now, some of you might say that's expensive, okay? But I disagree, because the PE, the S&P, was 18 times before any of these black swans happened. So the market is cheaper today after 6 black swan events. But here's the point I'd make. You had 6 black swan events that should have wiped out the stock market, should have wiped out profits, caused a recession, but the economy survived and the stock market survived. I would argue the PE, the market should be going up. And that gets us to the next point, which is I think there are 2 reasons to expect US growth to outperform expectations. The first is that AI is still in the early stages. Okay, I'm just pulling up numbers. These are estimates for IT spending around AI, but IDC just published their most recent report, and they are forecasting $1.3 trillion